Alright, so let's talk about something I don't often cover. Forex trading. For the longest time, I stuck to what I knew best. That means real estate and index funds. It's slow, it's steady, and it's proven. But I kept hearing about Forex, the foreign exchange market. The idea of trading currencies seemed fascinating. It's the largest financial market in the world, open 24 hours a day, 5 days a week. The potential for profit was huge. I knew I couldn't just ignore it. So, I decided to dip my toes in the water. I opened a small trading account with a few $100s. I figured, what's the worst that could happen? At first, I tried to learn everything myself. I watched hours of YouTube videos, I read articles and downloaded ebooks. I learned about pips, leverage, and technical analysis. I stared at charts with so many lines and indicators they looked like modern art. I tried drawing my own trend lines. I tried predicting where the market would go, and let me tell you, it was tough. Really tough. The market moved so fast and my initial trades were mostly guesses. I would win a little, then lose a lot more. It was incredibly stressful and time-consuming. I realized that becoming a pro trader would take years of dedicated study, and honestly, I didn't have that kind of time. That's when I started looking for a smarter way to trade. I needed a shortcut. I wasn't looking to get rich overnight. I just wanted a more reliable way to make trading decisions without spending all day analyzing charts. I heard people talking about Forex signals. The idea was simple. Someone else, an expert trader, does all the hard work. They do the analysis. They find the trading opportunities. Then they send you a simple message. It tells you exactly what to trade, when to enter the market, and where to set your profit and loss levels. It sounded almost too good to be true, but I was willing to give it a shot. My goal wasn't to blindly follow someone forever. My goal was to use signals as a learning tool. I wanted to see what the pros were looking at. I wanted to understand their logic. Why did they choose a specific currency pair? Why that entry point? It was like getting a backstage pass to a professional trader's mind. I decided to dedicate a small part of my portfolio to this experiment. If it worked, great. If it didn't, it would be a cheap lesson. I was ready to find a reliable signal provider and see if this method could actually work for someone like me, who was busy with other investments. So, what exactly are Forex signals? Let's break it down in the simplest way possible. Imagine you have a personal trading assistant. This assistant is a team of experienced traders who watch the markets all day. When they spot a good potential trade, they send you a notification. It's like a text message. This message contains all the key information you need to place a trade. It's not complicated financial jargon. It's a straightforward instruction. For example, it might say to buy the euro against the US dollar or EURUSD at a specific price. It's designed to be quick and easy to understand for anyone. These signals typically include a few critical pieces of information. First, the currency pair to trade, like GBPJPY. Second, the direction, which is either buy or sell. Third, the entry price, which is the exact price at which you should open the trade. Fourth, a stop-loss price. This is super important. It's a safety net that automatically closes your trade if the market moves against you by a certain amount, limiting your potential loss. And finally, one or more take-profit prices. These are price targets where your trade will close automatically, locking in your profits. It's a complete trading plan delivered right to your phone. Finding a good signal provider was my next challenge. There are a ton of them out there, and many are just scams. They promise impossible returns and show fake results. I did my homework. I looked for providers who were transparent. I wanted to see a verified track record of their past trades, both wins and losses. I looked for channels that offered free trials or had a community of real users who could share their experiences. I avoided anyone promising a 100% win rate because that simply doesn't exist in trading. After a lot of research, I found a provider with a solid reputation and realistic claims. They seemed to focus on risk management, which was a huge green flag for me. Once I joined their channel, the process was incredibly simple. The signals would arrive through an app like Telegram. A notification would pop up on my phone. I'd open the message and see the trade details laid out clearly. For example, buy EURUSD at 1.0750, SL at 1.0720, TP at 1.0800. All I had to do was open my trading app, find the EURUSD pair, and copy those numbers into the order form. The entire process took less than a minute. It removed all the guesswork and emotional stress from my trading. I no longer had to second-guess myself or stare at charts for hours on end. I just had to wait for the signal and execute it. Having the signals was one thing, but using them correctly was another. I knew I needed a solid plan. I didn't want to just blindly punch in numbers. My first rule was about risk management. This is the most important part of trading, period. I decided I would never risk more than 1% of my total account balance on a single trade. For example, if I had a $1,000 account, the most I could lose on any one trade was $10. This meant I had to calculate my position size carefully for every trade based on the stop loss provided in the signal. This discipline ensured that a few losing trades wouldn't wipe out my account. It kept me in the game for the long run. My daily routine was straightforward and didn't take much time. I would check for new signals a few times a day. When a signal came in, I would first check the chart myself. I wasn't trying to second-guess the experts. I was just trying to learn. I would look at the price and see if I could understand why they were suggesting the trade. It was like a mini lesson each time. Then, I would copy the entry, stop loss, and take profit levels into my trading platform. I made sure to double-check the numbers to avoid any silly mistakes. Once the trade was placed, I let it be. I didn't sit and watch it tick by tick. The stop loss and take profit were set, so I trusted the plan. One of the biggest challenges was emotional discipline. It's easy to get greedy when a trade is winning and want to hold on for more profit. It's also easy to get scared when a trade goes down a little and want to close it early. I had to fight those urges. I made a rule to never interfere with a trade once it was live unless the signal provider sent an update, like close trade now. I had to trust the research that went into the signal. This removed my emotions from the equation and turned trading into a more mechanical, stress-free process. It was about executing a proven strategy consistently, not making impulsive decisions based on fear or greed. To keep myself accountable, I started a trading journal. It was a simple spreadsheet. For every trade, I recorded the date, the currency pair, the details from the signal, and the final result. I tracked my wins, my losses, and my overall account balance. This was crucial. It showed me that the strategy was working over time, even with some losing trades. Seeing the numbers in black and white helped me stay disciplined. It proved that by sticking to the plan and managing my risk, my account was slowly but surely growing. The journal was my proof and my motivation to keep going. The results were, honestly, better than I expected. Over the course of about 6 months, I stuck to the plan religiously. I took every signal that came through. I managed my risk on every single trade, and I tracked everything in my journal. There were losing weeks, for sure. There were times my account went down a bit. That's normal in trading. But because I was only risking 1% per trade, the losses were small and manageable. The winning trades, on the other hand, were often much larger than the losses. The strategy focused on a good risk-to-reward ratio, which is key. The wins eventually started to stack up and compound. After about 6 months of consistent trading, I checked my account balance. I had started with $1,000 in this experimental account. The balance was now sitting at just over $2,000. I had officially doubled my initial investment. It wasn't a get-rich-quick scheme. It was the result of patience, discipline, and following a smart, risk-managed strategy. Doubling your money in 6 months in any investment is an incredible return. And the best part was, I achieved it without spending hours analyzing charts or stressing over every market move. I probably spent no more than 15 minutes a day executing these trades. Now, I want to be very clear. This is my personal experience. Trading Forex is risky, and results are not guaranteed. You could lose money. Using signals doesn't eliminate risk. It just helps you manage it with expert guidance. It's not a magic bullet. You still need to be disciplined and have a solid risk management plan. The key is to never trade with money you cannot afford to lose. Always start small and focus on the process, not just the profits. Continuous learning is also essential. Use signals as a tool to help you understand the market better, but don't stop learning on your own. This journey taught me that with the right tools and the right mindset, Forex trading can be a powerful way to grow your money. It's not as scary or complicated as it seems, especially when you can leverage the expertise of others. If you're curious about this approach and want to see how it works for yourself, I've got something for you. I've convinced the signal provider I use to create a special link for my viewers. You can check it out in the description below to join the same Forex signal channel I used. Give it a try, start small, and as always, be smart with your money. Thanks for reading.